We've got Mukul Kochhar joining us right now. He's head of institutional sales India with Investec Capital Services Private Limited. Mukul, great to have you back on the show. Thanks very much. You were last with me on the show on the 29th of April. And we were still kind of getting earnings, etc. And we did spend a brief time talking about earnings. And your general broad view was, don't get too excited. Yeah. When, A, the numbers themselves, B, the bar for beat is already quite low. So curb the enthusiasm. We've got the full picture now, Mukul. What's your view?
All right. So at the time that we spoke last, my big worry was on the PSU banks as they were yet to report. That worry sort of came true, but on the other hand, the rest of the sectors, mainly the cyclicals, actually outperformed, and earnings on an aggregate came out better than what I was thinking or expecting. So that way this quarter has actually been fairly okay for the markets. Now the way one can sort of if one wants to give numbers to it, so last quarter you had 4% year-on-year sales growth. If one takes out commodities, they're very sort of volatile, so tough to get trends over there. If you take them out, last quarter was 4% year-on-year. This is for an aggregate of 500 companies, slightly short of BSE 500.
You're talking about net level or top line?
Yeah, net sales.
Okay, net sales. Yeah.
So sales is the best indicator for in a way pick up in activity, because that tells you how much. As a way you can even sort of take it as an indicator of how the economy is doing. So that 4% has actually accelerated to 8% in the current quarter. More importantly, if you look forward, it sort of puts the next year and the year after numbers in sort of doable range, because you're talking about 9 to 11% over there. So that's what sort of what was good that came out of the quarter. I mean, if I want to sort of give another number to it, the number of companies that reported and resulted in analyst upgrades was 18 out of the Nifty 50. Now, if you put that number in perspective, last quarter it was just 8, right? So 42 out of Nifty 50 companies either had downgrades or sort of steady earnings for the next year after the quarter. That number has gone up to 18. If you look the quarter before that, it was only 4. So what that tells you is that slowly and steadily we're getting to a point where forward estimates are getting into doable range. So that, I think, is a bigger positive that folks miss when they talk about just earnings growth for the current quarter.
So just to kind of re-emphasize the point, you're saying that ex-commodity companies, approximately for about 500 companies, in fourth quarter, net sales grew 8% year on year.
Yep.
In the third quarter, October to December, they had grown 4% year on year.
That's right.
Right? And you said that 18 out of the 50 Nifty companies have seen earnings upgrades this year.
That's right.
This quarter, fourth quarter.
Forward earning upgrades, yeah.
And in the third quarter, that was about 8 odd companies.
That's right.
Okay. So overall, there has been an improvement.
There's been an improvement, and more importantly, stocks works on expectations, catching up with expectations. So partly, as we spoke about last time as well, the earnings downgrade cycle was on. Analysts were downgrading estimates. So the catch-up has happened through two fronts, where some of the companies have beaten estimates, plus over the last few quarters, estimates themselves have come down. So you're seeing a little bit of that catch-up happen. And this quarter, I think, may be the inflection point where you may start seeing on an aggregate some earning upgrades going forward.
Can we say earnings expectations have actually risen after Q4?
Very marginal. I would say no, not really. I mean, if you have only 18 companies seeing upgrades, it's tough to say. But it was a marginal move. I would say less than 1% overall.
Okay. What does it do for the financial year 17 expectations? Because the base is a little higher now, right?
Yeah, no. So on an aggregate, see, these are marginal sort of moves here. So on an aggregate basis, the number moved less than 1%. I think it was still a downgrade of minus 0.5%. So on an aggregate basis, numbers haven't moved much. It's just the trend that we are speaking about, which sort of gets one in a little bit of a positive territory. More than that, what I would be sort of looking for is progress on GST, right? that will be a transformational change for India. And how the government chooses the revenue neutral rate will be closely watched. Now, if and indications are that we may get that through in the monsoons. If that happens, then then everything sort of changes. So, but the play there would obviously then be cyclicals, which is what we've been talking about for the last 1 or 2 quarters. That's where the earning comfort is. The incremental news flow that comes out that can be a positive will once again be positive for cyclicals. So stocks like ICICI, cyclical on the private banking space. There are other cyclical stocks also that one can play through for the cycle.
I'll get to the GST in just a bit. So for financial year 17, what is your earnings growth expectation?
So financial year 17, we're talking roughly 15%. So sales growth, and I'm talking ex-commodities again, sales growth of roughly 10%, earnings growth of roughly 15%.
So around what? I mean, 450 odd rupees or so.
Yeah, I mean, you can
for Nifty companies.
It's 17, 18 times earnings on that basis. So yeah, you can actually sort of
around there.
Yeah.
Okay, so does it leave any valuation comfort?
So see, honestly speaking, valuation comfort is not there. So you're not India is right now not a value game at all. In fact, if you look at it, India is probably getting the most attention of any market globally today. There was a conference, investment conference, sort of private investment conference 2 weeks before in the US. Global, where three investors were asked which is your favorite market to invest in, and all 3 of them chose India. So it's not an undiscovered market. It is a market that's getting a lot of attention. People know how to invest in India. Avenues are available, so it's not cheap by any measure. Economic activity will have to pick up. Groundbreaking reforms will have to sort of be put in place for market to work further. Some indications on that are positive right now.
But even to take on from where we said, if those same three people had said, were asked, well, what would you buy? Possible they'd come up with a blank? I mean, something fresh that you'd like to buy.
See, this is where I've been going for the last 2-3 quarters. Defensives in India are extremely expensive, right? And I keep on saying that. I maintain that, no change there. So buying companies at 50 times earnings is honestly, I don't know, valuation comfort doesn't come in, right? The cyclicals, there are some cyclicals which are cheap, right? So that is where one can play, and the catalyst there would be reform-led growth. So, there you can build a story. And once again, if you build a story there, you're forced to sort of say that, okay, fine, cyclicals will outperform defensives. Is a valuation of 50 really justified? Do I really need to hide in defensives? So once you start answering those questions, you may see a valuation correction in some defensives and some sort of valuation, correctly deserved valuation upgrade, catalyst driven in some cyclicals.
Sure. But, again, we've been kind of waiting for this to happen for a while. It's not happened, right? And hence, 50 becomes 55 for...
Yeah, it's a very, very good sort of, point that, ever since there was a government change last 2 years, people have just been sort of, crying.
Sorry, I think we should, apologies, that super is defensive in India extremely expensive, is what Mukul said. So, my bad actually. Go on.
So, all right, so we can correct the tape over there.
So, you're talking about, from the beginning of the Modi government, the expectation was an infra-led thrust, right? And the cyclical recovery taking hold, which hasn't happened. Go on.
Yeah. So there have been very good reasons for that, and let's talk about it, right? So when there's a regime change, I mean, one can even take parallels with a company, right? Immediately the market bids up the stock or the market in this case, thinking that there'll be a quick change. But honestly, quick change for any system, let alone a complex system like a country, is very difficult to put in place. Markets typically don't look forward or discount earnings more than 2 quarters. So if you don't see any improvement in 2 quarters, they sell off. And that's naturally what happened with India. And you had various bouts of these where the markets, got excited only to get disappointed again. What is different, maybe different this time around, is 2 years have passed. The government has done some groundwork. The bureaucracy is sort of being put in place. More importantly, I think they're sort of managing the floor in the parliament extremely well now. They've managed to marginalize the opposition. I mean, you see that in the press all day. The focus is now on, a particular party Mukt. I mean, so the point is that they've sort of managed to polarize opinion a bit against the opposition. They've managed to sort of, in a way, you can say, divide and conquer. And last parliament session was one of the most productive in recent years, maybe 10-15 years. So that gives one hope that the next parliament session will be equally productive, with one of the most important reform bills being taken up for discussion in that. If that happens, it's an extremely good sign for the country. There are many low-hanging fruits in the country. You have bad infrastructure, bad logistics, supply-driven constraints, which causes inflation. I mean, the what needs to be done is not hidden. I mean, a lot of people, including this government, knows. If they manage to put in some steps which address that, that would be a positive.
Although I'd like to come in on that point that you made, that they've managed it extremely well. But if you ask a lot of people, that's the one thing that people say hasn't been managed well, which is flow management, etc.
Agreed. So right, that is, I agree.
I mean, take GST as an example. There were no ideological differences between the Congress or the BJP, for that matter, right? Like, for example, the land bill, there were ideological differences. In this case, there were none.
See, it took 2 years. You raised a very good point. See, most things take time to put in place. So partly it was the impatience of markets, which sort of was driving this disappointment. I mean, if you look at it, what is the Congress saying on the GST? They're saying cap 18%, don't have the 1% cess, temporary cess that they're putting on interstate commerce. So what the Congress is asking for is not illogical. What they're saying is not illogical. It's the right thing to do. They're rooting for an ideal GST bill. I mean, most people would say that they're being obstructionist. I don't think they are. They're rooting for the ideal GST bill. Now, what happens is, the ideal GST bill doesn't work for a lot of manufacturing states like Maharashtra, Tamil Nadu, Gujarat. So there's obvious opposition to the ideal GST bill. Now, in a complex country like India, I would say get the best reform through that has a chance of passing through, which is what this government is doing. And that is where they've been able to marginalize some of the Congress opposition.
One issue on which GST is stuck is put the rate in the bill itself, right?
That's wrong, right? Why would you... See, constitutional amendment, while the
I agree. I know. I'm not saying it's wrong or right. I'm saying, why would manufacturing states oppose that? You said that it doesn't work for them. Or are you talking about something else?
Yeah. So I'm not talking about the cap and manufacturing states. I'm saying manufacturing states are opposed to GST because...
But they're opposed because they'll lose revenue, right?
Exactly. So, exactly. No, you're absolutely right. So the government needs to bring them on board. Luckily, the manufacturing states are either allies or sort of governed by the government. Yeah. So that sort of
one which isn't is the Tamil Nadu. Which
exactly. But Tamil Nadu remains a friendly government. Yeah. So the way to sort of assuage that concern is basically just tell them that we'll do a 5-year sort of guarantee of your revenues. And even if optically they cannot seem to be supporting the bill, they can potentially, there's talk that they may stand out.
Just one thing, why is talks around GST back on the table? It's almost back from the dead in a way.
No.
And suddenly I've been hearing GST from a lot of people I've been talking to that, well, why is it back? So
I'll tell you why the possibility in this. It's always been talked about because it has been seen as a major reform, and the more one gets deeper into the bill, one can understand how good it will be for the country. I'm in no doubt that it's a major reform and it would sort of boost growth.
Obviously it's been debated for years now.
I'll tell you what has changed.
Why is there was a lull? I mean, people.
I agree. So there was a time, I think, just 2 or 3 months back, where the Congress could still sort of get people on board. Sort of there were parties still willing to toe that line. I think that cord has been broken, and parties are clearly now sort of taking an independent stand, looking at what's good for their states. I'm talking about regional parties, looking at what's good for their state and looking for maybe at a certain level looking for what's good for the country as well. So you saw Mamata Banerjee immediately after the election coming out with vocal support for the bill, which he had been indicating slightly softly in the past. Amit Mitra is a major part of constituting what the GST bill is. If you look at UP, both both BSP and SP are supporting the bill.
Sure.
So the opposition on this topic has been totally fractured, which is what is probably working this time around.
Sure.
Congress has lost seats. They're down to probably going to be down to 60 seats once the count is done on the 11th of this month. So it has a good chance of going through. You need, if you can limit opposition to 82 seats in the Rajya Sabha, it can actually go through.
Can go through. Okay. So real shot now of passing this, right?
I would think so.
Okay, fair enough. Let's just get back to the market. The last you were on the show, you said you were talking about ICICI versus Axis, right? You were saying that ICICI is a good bet.
That's right.
Right. You also told me that you like Bajaj Auto.
That's right.
So in the case of Bajaj, since we last spoke, we got the May numbers, the auto numbers. And what the numbers show is that Honda, which isn't listed, has taken almost 50% of new sales. Honda accounts for almost 50% of new bike sales now, locally.
So partly the weakness has come from Hero. So if you look at Hero just grew 2%. What is going for Bajaj is that they're growing profitable market share there. Their higher end bikes are selling more. So they've got Avenger going well. So they've got a few other sort of V is doing good. So they've actually sort of managed to sort of hold up sales on the higher end. Market share has actually increased 5 percentage points in the last year. So Honda probably is impacting or going to impact more the scooter players, which is Hero and TVS as they ramp up capacity. Bajaj actually is a slightly more complex story, right? As they're sort of gaining market share in domestic, one should not forget that more than roughly half their market, which is exports,
yes,
is cyclically challenged right now. So I would honestly sort of, as the domestic is picking up and supports earnings at present, I would play it for the cyclical upturn in the EM markets as well, which is, I mean, as most cyclical things, they do bounce back.
Fair enough. Where else do you see opportunity, absolute opportunity? Mukul?
So, honestly, the stock picks haven't changed from the last time I spoke. I mean,
because I remember you saying that, generally valuations, your view has been that valuations are quite stretched, right?
So I'm still...
private banks is one area.
Yeah,
which you
exactly.
think.
So I'm still avoiding the stretched valuations like consumers. Private banks is a great area where you have valuation comfort. There's also a story of market share gains there, profitable market share gains as some of the PSU banks retreat. So yeah, I mean, HDFC Bank, ICICI Bank, these remains top pick for me. This is also the cleanest way in my mind to play the cycle, right? So if one thinks there's a chance that you may see a cyclical upturn, I mean, there's good visibility on earnings. They don't disappoint or disappoint on earnings much. A good way to play the cycle. These are the best proxy on the economy. So my thinking was the same last time, hasn't really changed. The only thing I think is now, that time I wasn't thinking of the possibility of GST going through. And now if that is an incremental sort of positive that I've started thinking about going ahead.
So what is the GST basket of stocks, Mukul?
That's a tough question. I mean, so the way to think about it is, GST is, by the way, GST doesn't do anything in 1 year, right? So the April 2017 is when you're thinking about implementation. Most companies that you speak to right now, they say that you've tried wolf so long, we'll see when it happens, right? So companies are not preparing for it. So when the GST bill happens, you'll see companies building up plans. Maybe another year or two when you start seeing, company earnings starting to get impacted. So rather than a GST basket, I would probably say, what do I play for improving sentiment? Some incremental improvement in the economy, and that's why I started just sort of say banks. I mean, the answer comes back, Pat. Just play banks, be safe. You don't know where the earnings are going to play, how the companies or how long they're going to take to get benefit of GST. It's a tough ask. So stick to the economy improvement, economic improvement. Which sectors benefit? Just play that.
But surely you have GST, not a basket of stocks as I put it, but better, more direct plays. Even though the impact of that.
Okay, I can tell you. I mean, see, I mean, we tend to be very earnings focused. I mean, if you don't see earnings improvement in 3 years, it's tough to say that this.
But sometimes around landmark.
But I'll tell you what stocks will benefit in the longer run, right? So Logistic stocks, for instance, they should see improvement. Anything that is a play on organized over unorganized is going to benefit. I mean, what the GST would do is it will bring a lot of your taxation under automation, and it's going to synchronize central taxation and state taxation. Make it very difficult for companies to hide, right? So you'll see more of the unorganized sector getting taxed. The price benefit from taxation that they enjoyed is going to get slowly eroded. Indian markets are going to get organized more. So you'll see any company that is a sort of a play on organized over the next 5, 7, 10 years. Market share gains are going to start accelerating. FMCG, although very expensive, any manufacturing company will be able to sort of, manage their manufacturing, logistics, warehousing better. Right now, they plan their warehousing and logistics based on which is the lowest tax state, which is very suboptimal. They'll start looking at the right way of doing it. How do I manage the inventory in my system? How do I manage my overall logistic cost? Where do I locate my warehouses? So that becomes a straightaway sort of a long-term sort of driver for this. I mean, this is another sector which will benefit from taking market share from unorganized. So FMCG, big beneficiary. But put it in context of valuations, I think more than price.
Maybe the GST will eventually make them a little less expensive.
I think
bet on it.
No, see, I think you may be right. The unintended consequence could be that people go for cyclicals. They stop hiding in some of the defensives, and they start sort of becoming. These are great businesses, by the way. A little lower valuation, I'd be very, very excited about them. But right now it just doesn't give.
Well, just one last question. I'm out of time being told to wrap, but just one last question. The Labour Department, as slightly unrelated, releases. Jobs added in the economy. I mean, they do a quarterly survey of some 3,000 firms. And I don't know if you looked at the latest data, the October to December number showed actually job losses. 2015 as a whole actually saw the lowest addition in jobs on record. I mean, they started collecting this data right out of the 2008 crisis. Now, the bigger survey is the NSS survey, happens once every 5 years. The last one was done in 11-12. That was an out-of-turn survey. And so that is a few years back. This is the latest numbers we have. CMIE also collects, they also publish unemployment data. I mean, that's a large sample, 130,000 individuals are polled. And they collect, they count those as unemployed who are looking for work and can't find work, very simply put. That also, in their data shows from Jan of 2016 has increased to about 12.5, has increased by 250 basis points as of the end of May. I find very little mention of these things. I mean,
So let me actually elaborate a bit on this. Any data point that you pick up to get an impact on the market, one should look at the timeliness of the data point and the accuracy, representativeness, accuracy/representativeness. If you look at any of these sort of census surveys being done, they're very good for market sizing for a company, maybe for political parties in elections. But for markets, I mean, I don't know how relevant they are, because they take years to actually collate the data and then publish it. By the time they publish it, I'm sure the ground situation
this is a quarterly number, right?
So I mean, even
now
then,
it's getting better. CMI, for example, they publish this data every day. I mean, so this is a month, and they.
I'm talking about the NSS data. So, but I mean, let's come to that as well. So
I mean, if you look at the US number, the jobs number which gets published, right?
Yeah, but that's a very, very broad sample. The US. So by the way, the US number, the BLS number is extremely, extremely broad. Most companies are required to report a single hiring or a single firing, right? So by definition,
more expensive, more extensive, absolutely, no doubt.
No, but which company in India hires and reports to the government? Which company does that? So it's more like me calling you and asking you, have you hired workers? You're saying the market there's a world of difference in the data quality here.
Sure. But one other quality is that survey is done over the telephone, and here people actually, representatives actually go to these households and talk to them. I'm talking about the CMI data, which is the broadest of.
See, I can tell you, I can tell you one thing. In a country of the size India, where you do any foot survey, if you're trying to do any representative survey. statistically it will take too long. Two will be too expensive, right? So any survey that tells me that I visited X number of households and you should sort of buy a stock based on that.
No, I'm not saying that. I'm not saying that. I'm just saying that you can derive broad trends.
No,
right?
no, absolutely not. You have to look at so let's take another example, right? So we do these opinion polls in every state, right? And so they flashed on every channel. Everybody takes them very seriously. Look at the track record. I mean, this is like a straight check on where you did a survey and how representative that is. I mean, you went and asked people. You came out and you said that Jayalalitha is going to lose, and look at what really happened. So that is what I'm saying. In statistics, your sample really has to be relevant to the size of the population. It also, the sample has to be very, very well selected to be. So in India, just imagine, right? Every state is different. You move. So I was meeting some FMCG companies last week. And all of them were saying, I moved like 100 kilometers from one place to another, and the market completely changes. So just imagine the complexity and even
I agree. We should actually get you on for a specific discussion. I'll send you a link of my interview with Mahesh Vyas, CMI. I mean, they, I think, do it very scientifically, and I just recently stumbled upon that data point.
To be reliable, my opinion is it'll just be too prohibitively expensive for any private party.
It's funded by the Bombay Stock Exchange, so I don't know what it costs, but it's the expenses are taken care of by the BSC. They also have a tie-up, by the way. They publish a consumer sentiment number, and that is in tie-up with the University of Michigan. So that's also, I think, sponsored by the Bombay Stock Exchange. Anyway, but that's for a later time. Thanks very much, Mukul. Great speaking with you.
No worries.
Thank you for coming in
Thanks
with
for having
that
me.
perspective.